Let's check in with our business editor, Tikki Fullerton. Tikki, a big day of results, but let's kick off with how the market went today.
A big day of results. Good afternoon, Kieran. Now, the market just fell off about 0.7%, but that was surprising given the huge highs that we had overnight from the US. But I think some really big companies had some big drops in share prices, so not much impact either from the jobs numbers today. But let's go to some of these companies. Funnily enough, one big company, AMP, the share price went the other way. It rocketed up 10.5%. Now, two things to say about AMP. Firstly, what they did was they completed the sale of their life insurance business and gave a lot of the proceeds back to these long-suffering shareholders, a 10-cent special dividend and a share buyback. But look, the second thing we should say is really all about AMP's problems over sort of Me Too issues. One, in some ways, has got a feel for Francesco De Ferrari, the CEO. He's trying to turn this ship around after the Royal Commission. He's radically restructured the financial advisors. He's dealing with court action on that. He's sold the insurance, as I say, and he's bought back 15% of AMP capital from the Japanese. There's a huge amount going on, and he's trying to change culture and behaviour. And what happens is right-hand man, Alex Wade, who he personally picks to run AMP Australia, he gets caught on all these conduct issues. Now, look, he today he said he didn't want to talk about Alex Wade. I reckon at the media conference there would have been 12 questions. 9 of them were around culture and Alex Wade. Here's a grab from Francesco De Ferrari.
On Alex, I've already commented. I am not really going to comment on the speculation of what I'm reading in the media. I hope you all understand this is not me trying to evade the question. I am trying to run a business that delivers for clients and for shareholders. It is important that I am able to tell the story of all the fantastic work that the majority of our employees have achieved while coming to work every day and really putting in a lot of effort. I also need to ensure that I can maintain the privacy and confidentiality of these matters, because I need to have an environment where our employees feel free to speak up and feel that it is safe for them to speak up and raise concerns. Because if I compromise on this, I will not have fulfilled my role as CEO.
I mean, the problem is we've had female employees going to the newspapers, and in a way, the CEO could have said, "Look, I'm really, this is a kick in the guts for me. I'm absolutely devastated. I handpicked this fellow. It's absolutely unacceptable behaviour, what's happened, particularly when we've got so many good, hard-working employees." But look, he didn't do that. So, look, it's interesting to see whether that story will travel. But on the other results, we had AGL. Now, their share price plummeted 9%. Ed Boyd talked to AGL Chief Executive Brett Redman on his full year. Now, as I say, it was the biggest fall in the share price since the GFC, thanks to COVID, bad debts from customers, low electricity prices. Profit was actually up, but underlying profit could be cut by a third next year. Here's Brett Redman.
We've been talking to the market for probably a couple of years now that we were expecting headwinds to our business, headwinds to our markets, which were all about pushing price down. So good for customer, a little hard for business, but good for customer. And while we've been predicting this shift, what COVID has done is got us to the future faster. So as the virus came in, we saw it having some effect on demand, although not as much as you would think. Demand has held up reasonably well, but some softness. But it also reduced confidence in the market as well. That drove a much more rapid fall in wholesale prices on the electricity side. And then on the gas side, you've seen globally a big drop in demand, which has driven a much larger drop in price as well. So they're the most obvious effects. Separately, we've been doing a lot to support our customers. We've had something like 40,000 customers on our COVID-19 support program. Those customers are all about giving them the ability to delay payments, to get them through this difficult period till they're back on their feet again. Really pleased to say about a quarter of them have back on top of their bills entirely. The rest we're continuing to support, but that comes through in bad debt expense for us. But, it means that we're looking after our customers in this tough time.
How would you assess your relationship with the federal government at the moment? Would you expect them to potentially intervene in the energy market going ahead if prices for some reason go up dramatically?
I think what you've seen is a government that's being thoughtful about how to get the energy market working and get the community to a lower cost position, which is exactly what manufacturing and the wider economy is going to need going forward. Price has dropped. And so that, if you like, has meant that from the government point of view too, we've got to the future faster. You might remember Minister Taylor setting a $70 target for the market. We've now absolutely blasted through the bottom of that, and we're seeing lower the prices than that today. So what the government was hoping to see on the electricity side is appearing. So now it's about getting that through to customers to support our customers in this time. The focus is now moving to gas. How do we get a sustainable gas market at a cost that works for the economy and works for suppliers?
You mentioned Minister Taylor. A few months ago, we heard some reports saying he was trying to get Liddell Power Station's life extended to 2026. Is there any sort of truth in that?
Minister Taylor's been really engaged with us about what we're doing with Liddell and the bigger frame about how do we get good quality, low cost power into the New South Wales market. So we've been very engaged both with him, his counterpart at the state level, Minister Keane, with the departments that sit behind them. They've spent a lot of time understanding where we're at and where we're going. We continue to engage very, very closely at all levels so that we're being right up front about what we're seeing on that site.
Was there a chance that it could be extended to 2026, Liddell?
So we've got a public program where we expect Liddell to shut between 22 and 23. So one unit closing at the beginning of 22, the rest of it closing towards the beginning of 23. Under my tenure, we've already extended that a little bit so that we're there for the summer of 22, 23, but we're reaching a point where it's a very old plant. It's 50 years old. It's worn out. The costs of maintenance are getting ever higher. And so that publicly announced plan continues. Nothing has changed in that sense, even as we keep engaging very closely with governments at all levels and their departments, supplying information as requested so that they understand what's happening, and we also talk about what happens next.
So that's the situation with AGL and the Liddell Power Station, the ageing power station. Another couple of big results, Ticky, for Telstra and Woodside. Talk us through it.
Yeah, very big companies. Now, Telstra was down 7.8%, and you think about what a big company that is. That's a big drop. Now, look, as you said, their profit fell 14% to $1.82 billion. They still paid a final dividend of 8 cents, which makes shareholders happy. I think the deal with the NBN is still eating into Telstra earnings. They've got a lot of competition. The guidance for next year is a $400 million hit to earnings from COVID, and Andy Penn says his T22 turnaround, he is deferring some of those job cuts by 6 to 10 months, which is reassuring for those employees. Now, big gas giant Woodside, half-year results, a massive net loss of $4.07 billion. Now, that's largely because of what we knew of these recent huge write-downs of $4.4 billion US on its assets because of the oil and gas price, because of COVID. Now, lots of projects on hold, and CEO Peter Coleman says it's the crisis, he's not seen the likes of in 40 years. They did pay a dividend, though, of 26 US. The shares were down 1.5%. Kieran.
Ticky, thanks so much. We'll talk to you soon.